Taxation, Section 28, Rates of Income Tax on Foreign Corporations. A. Tax on resident foreign corporations. Number 1. In general, except as otherwise provided in this code, a corporation organized, authorized, or existing under the laws of any foreign country engaged in trade or business within the Philippines shall be subject to an income tax equivalent to 35% of the taxable income derived in the preceding taxable year from all sources within the Philippines, provided that effective January 1, 2009, the rate of income tax shall be 30%. In the case of corporations adopting the fiscal year accounting period, the taxable income shall be computed without regard to the specific date when sales, purchases, and other transactions occur. Their income and expenses for the fiscal year shall be deemed to have been earned and spent equally for each month of the period. The corporate income tax rates shall be applied on the amount computed by multiplying the number of months covered by the new rate within the fiscal year by the taxable income of the corporation for the period divided by 12. Provided, however, that a resident foreign corporation shall be granted the option to be taxed at 15% on gross income under the same conditions as provided in Section 27, Letter A. Number 2, minimum corporate income tax on resident foreign corporation. A minimum corporate income tax of 2% of gross income as prescribed under Section 27, Letter E of this code shall be imposed under the same conditions on a resident foreign corporation taxable under paragraph 1 of this subsection. 3. International carrier. An international carrier doing business in the Philippines shall pay a tax of 2.5% on its gross Philippine billings as defined hereunder. A. International air carrier. Gross Philippine billings refers to the amount of gross revenue derived from carriage of persons, excess baggage, cargo, and mail originating from the Philippines in a continuous and uninterrupted flight, irrespective of the place of sale or issue and the place of payment of the ticket or passage document, provided that tickets revalidated, exchanged, and or endorsed to another international airline form part of the gross Philippine billings if the passenger boards a plane in a port or point in the Philippines. Provided further that for a flight which originates from the Philippines but transshipment of passenger takes place at any port outside the Philippines on another airline, only the aliquot portion of the cost of the ticket corresponding to the leg flown from the Philippines to the point of transshipment shall form part of gross Philippine billings. B. International shipping. Gross Philippine billings means gross revenue whether for passenger, cargo, or mail originating from the Philippines up to final destination, regardless of the place of sale or payments of the passage or freight documents, provided that international carriers doing business in the Philippines may avail of a preferential rate or exemption from the tax herein imposed on their gross revenue derived from the carriage of persons and their excess baggage on the basis of an applicable tax treaty or international agreement to which the Philippines is a signatory, or on the basis of reciprocity such that international carrier whose home country grants income tax exemption to Philippine carriers shall likewise be exempt from the tax imposed under this provision. 4. Offshore banking unit. The provisions of any law to the contrary, notwithstanding income derived by offshore banking units authorized by the Bangko Sentral ng Pilipinas or BSP from foreign currency transaction with non-residents, other offshore banking units, local commercial banks, including branches or foreign banks that may be authorized by the Bangko Sentral ng Pilipinas to transact business with offshore banking units shall be exempt from all taxes except net income from such transaction as may be specified by the Secretary of Finance upon recommendation of the Monetary Board, which shall be subject to the regular income tax payable by banks, provided, however, that any interest income derived from foreign currency loans granted to residents other than offshore banking units or local commercial banks, including local branches of foreign banks that may be authorized by the BSP to transact business with offshore banking units, shall be subject only to final tax at the rate of 10%. Any income of non-residents, whether individuals or corporations, from transaction with said offshore banking units shall be exempt from income tax. 5. Tax on branch profits remittance. Any profit remitted by a branch to its head office shall be subject to a tax of 15%, which shall be based on the total profits applied or earmarked for remittance without any deduction for the tax component thereof. The tax shall be collected and paid in the same manner as provided in sections 57 and 58 of this code, provided that interest, dividends, rents, royalties, including remuneration for technical services, salaries, wages, premiums, annuities, emoluments, or other fixed or determinable annual, periodic or casual gains, profits, income, and capital gains received by a foreign corporation during each taxable year from all sources within the Philippines shall not be treated as branch profits unless the same are effectively connected with the conduct of its trade or business in the Philippines. 6. Regional or area headquarters and regional operating headquarters of multinational companies. A. Regional or area headquarters as defined in Section 22 DD shall not be subject to income tax. B. Regional operating headquarters as defined in Section 22 EE shall pay a tax of 10% of their taxable income. 7. Tax on certain incomes received by a resident foreign corporation. A. Interest from deposits and yield or any other monetary benefit from deposit substitute, trust funds, and similar arrangement, and royalties. Interest from any currency bank deposit and yield or any other monetary benefit from deposit substitute and from trust funds, and similar arrangement and royalties derived sources within the Philippines shall be subject to a final income tax at the rate of 20% of such interest, provided, however, that interest income derived by a resident foreign corporation from a depository bank under the expanded foreign currency deposit system shall be subject to a final income tax at the rate of 7.5% of such interest income. B. Income derived under the expanded foreign currency deposit system. Income derived by a depository bank under the expanded foreign currency deposit system from foreign currency transactions with non-residents offshore banking units in the Philippines local commercial banks, including branches of foreign banks that may be authorized by the Bangko Sentral ng Pilipinas to transact business with foreign currency deposit system units and other depository banks under the expanded foreign currency deposit system shall be exempt from all taxes except net income from such transactions as may be specified by the Secretary of Finance upon recommendation by the Monetary Board to be subject to the regular income tax payable by banks, provided however that interest income from foreign currency loans granted by such depository banks under said expanded system to residents other than depository banks under the expanded system shall be subject to a final tax at the rate of 10%. Any income of non-residents, whether individuals or corporations, from transaction with depository banks under the expanded system shall be exempt from income tax. C. Capital gains tax. Capital gains from sale of shares of stock not traded in the stock exchange. A final tax at the rates prescribed below is hereby imposed upon the net capital gains realized during the taxable year from the sale, barter, exchange, or other disposition of shares of stock in a domestic corporation except shares sold or disposed of through the stock exchange, not over 100,000, 5%, on any amount in excess of 100,000, 10%. D. Intercorporate dividends. Dividends received by a non-resident foreign corporation from a domestic corporation liable to tax under this code shall not be subject to tax under this title. B. Tax on non-resident foreign corporations. 1. In general, except as otherwise provided in this code, a foreign corporation not engaged in trade or business in the Philippines shall pay a tax equal to 35% of the gross income received during each taxable year from all sources within the Philippines, such as interest, dividends, rents, royalties, salaries, premiums, except reinsurance premiums, annuities, emoluments, or other fixed or determinable annual, periodic or casual gains, profit and income, and capital gains, except capital gains subject to tax under subparagraph 5 letter C, provided that effective January 1, 2009, the rate of income tax shall be 30%. Number 2, non-resident cinematographic film owner, lessor, or distributor. A cinematographic film owner, lessor, or distributor shall pay a tax of 25% of its gross income from all sources within the Philippines. 3. Non-resident owner or lessor of vessels chartered by Philippine nationals. A non-resident owner or lessor of vessels shall be subject to a tax of 4.5% of gross rentals, lease or charter fees from lease or charters to Filipino citizens or corporations as approved by the Maritime Industry Authority. 4. Non-resident owner or lessor of aircraft, machineries, and other equipment. Rentals, charters, and other fees derived by a non-resident lessor of aircraft, machineries, and other equipment shall be subject to tax of 7.5% of gross rentals or fees. 5. Tax on certain incomes received by a non-resident foreign corporation. A. Interest on foreign loans. A final withholding tax at the rate of 20% is hereby imposed on the amount of interest on foreign loans contracted on or after August 1, 1986. B. Intercorporate dividends. A final withholding tax at the rate of 15% is hereby imposed on the amount of cash and or property dividends received from a domestic corporation, which shall be collected and paid as provided in Section 57, letter A of this code, subject to the condition that the country in which the non-resident foreign corporation is domiciled shall allow a credit against the tax due from the non-resident foreign corporation taxes deemed to have been paid in the Philippines equivalent to 20%, which represent the difference between the regular income tax of 35% and the 15 income tax and the 15% tax on dividends as provided in this subparagraph, provided that effective January 1, 2009, the credit against the tax due shall be equivalent to 15%, which represent the difference between the regular income of 30% and the 15% tax on dividends. C. Capital gains from sale of shares of stock not traded in the stock exchange. A final tax at the rates prescribed below is hereby imposed upon the net capital gains realized during the taxable year from the sale, barter, exchange, or other disposition of shares of stock in a domestic corporation, except shares sold or disposed of through the stock exchange, not over 100,000, 5%, on any amount in excess of 100,000, 10%. Section 29, Imposition of Improperly Accumulated Earning Tax. A. In general, in addition to other taxes imposed by this title, there is hereby imposed for each taxable year on the improperly accumulated taxable income year. Again, in addition to other taxes imposed by this title, there is hereby imposed for each taxable year on the improperly accumulated taxable income of each corporation described in subsection B hereof, an improperly accumulated earnings tax equal to 10% of the improperly accumulated taxable income. B. Tax on corporations subject to improperly accumulated earnings. 1. In general, the improperly accumulated earning tax imposed in the preceding section shall apply to every corporation formed or availed for the purpose of avoiding the income tax with respect to its shareholders or the shareholders of any other corporation by permitting earnings and profits to accumulate instead of being divided or distributed. 2. Exemptions. The improperly accumulated earning tax as provided for under this section shall not apply to A. Publicly held corporations, B. Bank and other non-bank financial intermediaries, and C. Insurance companies. C. Evidence of purpose to avoid income tax. Prima facie evidence. The fact that any corporation is a mere holding company or investment company shall be prima facie evidence of a purpose to avoid the tax upon its shareholders or members. 2. Evidence determinative of purpose. The fact that the earnings or profits of a corporation are permitted to accumulate beyond the reasonable needs of the business shall be determinative of the purpose to avoid the tax upon its shareholders or members unless the corporation, by the clear preponderance of evidence, shall prove to the contrary. D. Improperly accumulated taxable income. For purposes of this section, The term improperly accumulated taxable income means taxable income adjusted by income exempt from number 1, income exempt from tax. 2, income excluded from gross income. 3, income subject to final tax. And 4, the amount of net operating loss carry over deducted and reduced by the sum of 1, dividends actually or constructively paid, and 2, income tax paid for the taxable year. Provided, however, that for corporations using the calendar year basis, the accumulated earning tax shall not apply on improperly accumulated income as of December 31, 1997. In the case of corporations adopting the fiscal year accounting period, the improperly accumulated income not subject to this tax shall be reckoned as of the end of the month comprising the 12-month period of fiscal year 1997 to 1998. Reasonable needs of the business. For purposes of this section, the term reasonable needs of the business includes the reasonably anticipated needs of the business. Section 30, exemption from tax on corporation. Again, exemption from tax on corporations. The following organizations shall not be taxed under this title in respect to income received by them as such. A. Labor, agricultural or horticultural organization not organized principally for profit. B. Mutual savings bank not having a capital stock represented by shares, and cooperative bank without capital stock organized and operated for mutual purposes and without profit. C. A beneficiary society, order or association operating for the exclusive benefit of the members, such as a fraternal organization operating under the lodge system, or a mutual aid association, or a non-stock corporation organized by employees providing for the payment of life, sickness, accident, or other benefits exclusively to the members of such society, order or association, or non-stock corporation or their dependents. D. Cemetery company owned and operated exclusively for the benefits of its members. E. Non-stock corporation or association organized and operated exclusively for religious, charitable, scientific, athletic, or cultural purposes, or for the rehabilitation of veterans. No part of its net income or asset shall belong to or inure to the benefit of any member, organizer, officer, or any specific person. F. Business league, chamber of commerce, or board of trade, not organized for profit, and no part of the net income of which inures to the benefit of the private stockholder or individual. G. Civic league or organization not organized for profit but operated exclusively for the promotion of social welfare. H. A non-stock and non-profit educational institution. I. Government educational institution. J. Farmers or other mutual typhoon or fire insurance company, mutual ditch or irrigation company, mutual or cooperative telephone company, or like organization of a purely local character, the income of which consists solely of assessment, dues, and fees collected from members of the sole purpose of meeting its expenditure. And K. Farmers, fruit growers, or like association organized and operated as a sales agent for the purpose of marketing the products of its members and turning back to them the proceeds of sales, less the necessary selling expenses on the basis of the quantity of produce finished by them. Notwithstanding the provisions in the preceding paragraph, the income of whatever kind and character of the foregoing organization from any of their properties, real or personal, or from any of their activities conducted for profit, regardless of the disposition made of such income, shall be subject to tax imposed under this code.